Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday. I woke up this morning expecting the stock market to be down a pretty good amount because over the past weekend, there was some big news, especially from Warren Buffett, saying that he sold every share that he owned in airline stocks. And I just kind of assumed that sort of bullish discussion would push the stock market down. And looking at it right now, it's pretty close to even. So I'm pretty surprised about that. In the past couple of videos, I've been talking about some of my top stocks to buy for May of 2020. And today's video, I wanted to talk about some of the things that I have been buying and go over what my current stock portfolio looks like right now. I ended up not making a portfolio video in April like I normally do every month, just because I knew that I was going to be buying a lot of new stocks that month, and I kind of wanted to wait to see what I was going to buy before I made this video. And at this point, I've added a couple stocks to my portfolio, and I've doubled down on some of the shares I already owned. Since I've talked about most of these companies in the past couple weeks, I'm going to break it down into the top 3 reasons why I love the stocks that I have, just so there's a succinct way for you to see what I like about each of the companies and why I'm bullish on them overall. Before we get started, I gotta say that I'm not a licensed financial advisor and this is not financial advice. And I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. You're gonna even hit the notification bell if you want to get notifications every time I upload. And with that being said, let's get started and talk about what my current stock portfolio looks like for May of 2020. First, I wanted to talk about SBUX Stock, ticker symbol SBUX. At the time of recording this video, surprisingly, it's my worst performing stock in my entire portfolio. Currently, the stock is sitting below $72 and I'm down 15% on my overall position. And I even made a video in the past couple days talking about why I was very bullish on SBUX overall. If you missed that, I'll link that up right now. If you missed that video, I'll kind of summarize the main reasons why I like the company. And one of the biggest ones is its overall exposure to China. In the past, this has been a detriment to the company. They're one of the first companies to come out and kind of ring the alarm bell for the potential dangers that the virus was going to have on the overall economy. So as a result, the stock market kind of pushed the stock down overall. And then as it started to spread, it pushed it down even further. So it's been hit pretty hard. But I think the exposure to China and the fact that those Asian markets are starting to open up faster than, say, the United States, I think will give them a lot of potential going forward. Right now, the stock price is 30% higher than the lows that we saw on March 23rd, and that makes me feel really good. There have been some news articles talking about how they think that the next quarter is going to be really bad for the company, but I think they'll be able to kind of pull things together by the time that happens. Now with that quick overview of the company, let's talk about the 3 main reasons for why I'm still bullish on SBUX, ticker symbol SBUX. The main one that I've already talked about so far in this video is its exposure to China, which I think is very beneficial for it overall. The second is its fundamentals, from everything I see, look really good. The thing that I like the most is that they have $2.8 billion in cash on hand. I've been very vocal in the past couple videos talking about how I want companies to have a lot of cash on hand to make it through this time of uncertainty. In addition, their increase in revenue has been very steady over time, and the demand for their products seems to still be present. Going along with that cash on hand, the third reason is that it has a pretty decent dividend of around 2.22% right now. While it's not something that's going to make a list of the top dividend stocks based off of the percentage, I think it's relatively stable based off of the payout ratio and the fact that cash on hand, and the CEO has come out and talked about how they are not at risk of lowering or suspending their dividend during this time. So those are the 3 main reasons why I like SBUX. Let me know what you think about SBUX in the comment section down below. Next up, I wanted to talk about Twitter, ticker symbol TWTR. This was a company that I went over in depth in my last video where I broke down my top stocks for the social media sector. If you missed that, I'll link that up right now. Currently, I'm still down a couple percentages as I've added to my portfolio in the past couple weeks, and the stock is down 13% year to date. Twitter was one of the main reasons why I held off on making the April portfolio videos, because I knew I wanted to add to Twitter specifically. It's been one of my favorite positions in the past, and I ended up doubling my position towards the end of March and going into April. Looking at the 1-year chart, I feel very good about my position overall. It's recovered from its lows, and for the 1-year price target, I'm looking at $35 from the resistance that we can see from the chart. So going from 25 up to 35 would be a fantastic increase, and I think it's very doable for this company. The recent news that affected the stock and pushed it down was their earnings report this last week. At the beginning of the week, we saw earnings from companies like Google and Facebook, which moved the whole sector up when they came out and said they saw better than expected increases in their revenue after they came out in March saying there are probably going to be some problems with that. And then Twitter released their earnings and they did not see the same type of increases that those other 2 companies saw, and the stock fell because of it. So even with that negative news, let's talk about the 3 reasons why I'm still bullish on Twitter overall. The first and probably the biggest reason is the fact that I love the platform. It's probably the app and website I go to most frequently, pretty much every day, multiple times at least. And I think it's a fantastic platform, and I can only see it increasing in size over the upcoming years. Also, they've seen some really nice growth in the past couple years. There was a 27% increase in revenue year over year, and there was a 23% increase in monetizable daily average users. And the third and final reason is I think it's still pretty undervalued compared to the rest of the social media sector. When you look at companies like Facebook, they're not going to be increasing in price significantly. Yes, they can go up over time, but a lot of their growth is pretty much capped at this point. And I think Twitter, based off of some bad news events with the drop in revenue that we saw this past quarter and stuff like the bug that they had in their revenue programs in October of last year. And so I think their company is significantly undervalued, and I will continue to add to my position, and I intend to have Twitter be a significant part of my portfolio going forward. Let me know what you think about Twitter stock in the comment section down below. Next up, let's go over Activision Blizzard, ticker symbol ATVI. Surprisingly, this is the best performing stock that I have in my overall portfolio, with my position being up around 15%. Currently, the stock is sitting just below $67 and it's up 12% year to date. And I made a video talking about this. This is one of the main parts of my top stocks for May of 2020. And there's a lot of reasons why I'm overall bullish on this company. One of the main things I love about this company is that they have so many different revenue sources. I've talked a lot on this channel about companies that have just one singular main revenue source. I think about stocks like Apple, where 55% of their revenue comes from the iPhone sales. But when I looked at Activision Blizzard, they have so many different income sources from all their different games and stuff like esports. And it makes me feel very good because I don't like companies being dependent on one main source. When you have recent successes like Call of Duty Mobile and Call of Duty Warzone, that makes me feel very good because this has been a company that usually does not put out too much new content. They've been very good at milking revenue out of games that have been out for years, like stuff like Overwatch and World of Warcraft. They release earnings tomorrow after the bell, and they've beat their expectations for the past 4 quarters, which makes me feel very good going into earnings. For the overall sector, there was a record number of digital sales purchased in the month of March with $10 billion in sales, and I expect Activision to see a very high percentage of those sales. And their CEO has been on record in the past couple weeks talking about how their games have been seeing a record number of engagement. So it makes a lot of sense. People are stuck inside playing video games, and I think Activision Blizzard is probably the best company to own in this video game sector. Also, you have next generation consoles coming out at the end of this year, and that makes me feel very good about the potential games that they can release and increasing their different revenue sources. With that being said, let's talk about my 3 main reasons why I'm bullish on Activision Blizzard stock overall. The first one just comes with the nature of what the lockdown is. There's been a record number of video games being played and bought, and for a company that focuses on video games, it's hard to not feel optimistic when you see these crazy numbers that are coming out of the overall sector. Number 2, their variety of revenue sources are very attractive. And with Call of Duty Warzone and mobile coming out in this past couple months, I think we're going to see a very nice increase in revenue over time, in addition to the next generation consoles and games that will be released by the end of this year. And then 3, I love the overall growth potential that comes with esports. Right now, things like that are being shut down, but they can be played remotely. And so it just increases their revenue sources. And I think it's a really exciting way to make video games more mainstream and be able to take advantage of potentially some of these massive TV deals that we've seen with sports. While this isn't a stock that you're going to see crazy returns with, it has been the best performing stock in my portfolio. Let me know what you think about Activision Blizzard stock in the comment section down below. Now I want to talk about the most recent addition to my portfolio, and that's AT&T Stock, ticker symbol T. Currently, the stock is sitting just around $29, and it's down more than 20% year to date. And seeing that, you might be wondering why I wanted to take a position. And one of the main reasons that I took a position in AT&T is the fact that I want to get more exposure to dividend stocks. I own currently companies like Starbucks that do pay a dividend of around 2%, but the 7% dividend that AT&T gives out is very attractive. Looking at the rest of my portfolio, AT&T is going to be a very different stock. I'm not expecting the price of the company to go up significantly over time. I'm mainly holding it because of the dividend. And with that being said, let's jump into the 3 main reasons why I finally added AT&T to my portfolio in the past month. As I've already mentioned, it is a very nice dividend stock with a yield of 7%. One of the really attractive things is that its payout ratio is around 15%, meaning that it does not appear like the company is going to be at risk of cutting or suspending the dividend. While that may change in the future as AT&T and the overall sector has been hit pretty hard, at this point I don't see any reason to think that they're going to cut that. Number 2, the technicals for the charts look very nice. When I go back on the 5-year chart, you can see that there was a very nice support set up around $28. And when I saw that, it went off of my alerts when it hit that level. And that's why I ended up buying the stock and adding it to my portfolio. For a company like this, I kind of expected to fluctuate in price between maybe $25 to $35. But as long as the dividend remains stable, it will be a part of my portfolio going forward. And the third and final reason why I've bought AT&T is the fact that I want to slowly increase my position size until I own 100 shares. In addition to the dividend payout, I want to have a stream of income coming from selling calls against my position. So while I'm not super close to getting to that 100 shares, if I steadily increase and add to my portfolio over time, I expect to finally hit that 100 shares required to sell covered calls against my position. And once I do that, that'll be probably the main reason why it's going to be a part of my portfolio going forward. The dividends in addition to selling calls against my position. Let me know what you think about AT&T stock in the comment section down below. Next up, I wanted to talk about another addition of the portfolio, and that's Microsoft, ticker symbol MSFT. The company is currently sitting below $180, isn't up 13% year to date, which is pretty impressive. Since I've taken my position, I'm already up 10%, and that makes me feel very good. It's right now my second best performing stock behind Activision Blizzard. As I've already talked about Microsoft heavily on this channel, I'll just break it down into the three main reasons why I added it to my portfolio. The first one is that it is a massive company. During times like this, blue chips are probably the safest bet you're going to have. And so adding a company that's as large and as stable as Microsoft was very attractive to give my portfolio overall stability. Next up, this is something I've talked about a lot, and I love the fact that they have three evenly distributed revenue sources. In the past couple months, we've seen some reports about problems with these supply chains, specifically coming out of China. And for a company that, say they rely very heavily on their physical products, that would be a huge hit to the company. But for a company like Microsoft that expected to see drops in their physical products for sales for this last quarter, but with cloud, they saw an increase in their revenue from that, which kind of balanced out the drops that you saw with the actual PC sales overall. So having three evenly distributed revenue sources is probably the most attractive thing to me for Microsoft. And the third and final thing is seeing the stock price fall for Microsoft. It's so hard to not want to add to your position or start a position. When I saw that fall, it was hard to say no. And when I put up the all-time chart, it is absolutely beautiful. And I want to be a part of that for a long-term position. Let me know what you think about Microsoft stock in the comment section down below. Next up, I want to talk about PayPal, ticker symbol PYPL. Since my last portfolio video, I've actually doubled down on my position. Currently, the stock is up 14% year to date, and my position is up 15% overall, so I'm very happy with that. Looking at the chart right now, there are some serious resistance levels that we're going to have to break if the stock wants to continue moving to the upside. But even with that resistance, I'm still feeling pretty bullish on the company overall. There are going to be earnings reported this week, and I'm going to be very excited to see what happens with that. Now let's talk about the three reasons why I doubled down on this position for my portfolio. First off, I absolutely love this product. Similar to stuff like Twitter, I use this product constantly. PayPal and Venmo have been on my phone and have been actively used for the past 5 years or so. It's how I pay rent, utilities, pay my buddies if we go out and maybe get dinner together. It is something that I use constantly, and I love the platform. Looking at the all-time chart, if it can break through this current resistance level, there's a lot of room to go to the upside. So once we see that break through that, I'm going to feel very good about the company. And the third and final reason is that their CEO has come out and said that they've seen a tremendous surge in the amount of transactions going on their platforms. It makes a lot of sense. People are stuck inside and cash payments aren't reasonable at this time. So digital transactions through PayPal and Venmo, it makes sense why they've been increasing in price. With earnings coming out this week, if the tremendous increase in volume is actually true, I expect it to be enough momentum to push through those resistance levels that I mentioned in reason number 2. Let me know what you think about PayPal stock in the comment section down below. All right, we have 2 more stocks to go. Next up, we're going to be talking about Snapchat, ticker symbol SNAP. Snap has been a company that has been in the news a lot recently, mainly because when they beat earnings in this past month, the stock jumped 20%, and so that was a huge increase. As of right now, the price is sitting around $17 and it's up 3.5% year to date. While I have added to this position since that last video, I probably won't add any more. When you look at the overall chart, there's been a lot of crazy price movement even in the past year. The stock has gone from $10 at the beginning of the year up to $19, down to $8.50, and now is currently sitting around $17. So that overall volatility is a reason why it's not a huge part of my portfolio. It's a company that I absolutely love, and I think it has tremendous upside potential, but it also has a lot of downside risk, which is why I'm managing that risk by keeping my position size relatively small compared to the rest of my positions in my portfolio. Let's talk about the 3 reasons why it's a part of my position, and the main one is a 44% increase year over year in its revenue, which is one of the main things that I really enjoy about this company. And one of my main goals for 2020 is for them to reach profitability, and I think this increase in revenue is a step in the right direction. Next up, there's been a 20% increase year over year in their daily average users, which is the largest increase they've seen. And so that makes me feel very bullish. They're increasing their revenue and they're increasing the amount of people that are consistently using their product. And third and final, I think Snapchat and Twitter do a great job at capturing the age range that their platform is made for. Twitter, in my opinion, is made for people that are older than 18, and then Snapchat is very good at capturing, in my opinion, probably the 13 to 30-year-old range. This is a product that I use every day similar to Twitter, and it's a huge reason why it's part of my portfolio. Let me know what you think about Snap stock in the comments section down below. And then finally, I wanted to briefly talk about Bitcoin. It's been a part of my portfolio for a long time, and I intend to hold it for probably 5+ years. At this point, I'm still down on my overall position, but I've been constantly adding to my position and it's been lowering my average cost. Currently, my average cost is sitting around $9,500, and so looking at the overall charts, that's well within reach. With a position like this, I'm totally okay if it goes towards zero. It's a very risky position. But in my opinion, I think it's more likely to go to $100,000 than it is to go to $1,000. So that's why I'm very bullish on it overall, and I've been consistently adding to my position for the past year and a half. Bitcoin is a type of investment that people have a lot of very strong opinions on, and I'd love to hear what you guys have to say about it in the comment section down below. So overall, that's been my portfolio for May of 2020. We've had some new faces like Microsoft and AT&T, and I've added to a lot of my positions like Starbucks, PayPal, and Twitter. And I intend to add to them more in the upcoming months when I finally get my tax return. I'll have some extra cash to invest into my portfolio. But for right now, I've tried to add overall stability with dividend stocks like AT&T and add to my position in Starbucks. And then I've tried to diversify and go for more blue chips, and that's why I've added Microsoft in my portfolio. Overall, I'm pretty happy with all my positions, and I'd love to hear what you guys are watching for May of 2020 in the comment section down below. Thanks for watching this video, stay inside, and I'll see you in the next episode.